Good morning, Steve Ray in Chicago with the morning grain comment. So grains are lower, the stock market's lower, crude's lower, most commodities are lower, and the dollar is higher. I think that there's renewed concerns in the marketplace about inflation, about recession, and just global economic slowdown. JP Morgan came out with their earnings and it was less than expected, and there is concern that higher inflation costs, higher producer costs, and is going to cut into earnings. And then the recent CPI data also could slow demand and even slow consumer spending. As far as the other news, I think the Dalian futures for the most part are a little bit higher. It was noted that China's soybean imports are down 8% from last year. Their edible oils down 21% from May, 75% from last year. Their pork imports are down 39%. So all this data is raising concern about their economy, their COVID lockdowns, and just how much commodity import demand there could be. Hog production is down because of increase in domestic hog production as far as imports are concerned. The Argentina farmer is a slow seller of beans. Some say it could be because the crop could be a little smaller, but also that they're worried about inflation. Brazil farmer also is slow selling beans, and most of that is because of less exports to China. We also noted that the most rapeseed contracts, whether in Europe or Canada, are lower. There was some talk about Malaysian palm oil bouncing back because Indonesia may be stopping any workers going into Malaysia because of a breach of contract. Yesterday's U.S. ethanol data was lower than expected, but it was a short week. Export sales week, 200 to 500,000 tons expected. Corn, old crop could be a negative number versus 100 to 400 new crop. Beans could also be a negative number for old crop, 100 to 300,000 tons of new crop. So again, those numbers are below what the trade would like to see and what could support prices. We also note that there is some concern about the European corn crop. It continues to be record heat in the western part of Europe. Also concerned about wheat, but mostly corn, and that they may have to increase their import demand. The problem is that Brazil has signed an agreement with China to sell corn to China, and that could reduce the amount of corn Europe can buy from Brazil. Argentina wheat crop is smaller because of the dry weather there. Our weather forecast right now looks to be some shower activity across parts of Wisconsin, northern Illinois, into Indiana over the weekend. Could be just a thunderstorm on top of Missouri over the weekend. The 6 to 10 day and the 8 to 14 day continues to show dryness. Let's call it 35% of the Midwest and the Southern Plains and parts of the Delta. Over the top of this dryness, though, weather in the northern Corn Belt and eastern Corn Belt should be okay. The 30-day outlook probably is more of the same. So the market has to decide, number one, what is the demand numbers? Number two, what's the final supply numbers? Does that change the carryouts from USDA July numbers, or are we kind of stuck here with strong resistance overhead?